Bob Pisani has more on the sell-off from the New York Stock Exchange.
After another down open, we paired some losses almost immediately after that as the Chinese authorities suspended the circuit breakers they had implemented just 4 days before. Then oil rallied, and we actually had a modest rally going in the middle of the day. Well, that all faded when a Reuters report came out suggesting that Chinese officials were being pressured to do a quick devaluation of the Chinese currency, perhaps as much as 10 to 15%, to help out the economy. And the markets moved south again to end near the lows for the day, even though there was no confirmation of that story. Except for defensive names like healthcare and utilities, most of the market was down 2%. But there was particular weakness in financials, with big names like Goldman Sachs and Morgan Stanley hitting 52-week lows. Now, this suggests the market believes that 2 or 3 Fed rate hikes are more likely than the 4 or so that Fed officials seem to be predicting. Now, that's very important because tomorrow our attention will turn to the U.S. economy. It's about time we did that. We're going to get the December jobs report. Now, right now, the markets seem to be pricing in a roughly 40% chance of a rate hike in March. Now, a number well above the consensus of 210,000 jobs created might very well be met with a negative reaction. In other words, we may be back to the idea that good news is bad news again. As for what will happen in China, Chinese ETFs that trade here suggest that Chinese markets could open down roughly 6% tonight. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.